Great. In fact, if you can share the recording later, that would be helpful for me as well.
Huh? Sorry?
I'm saying if, in fact, we can record this session and maybe you can, if you can share the recording with me, so that would be great for me as
Yeah, 1 minute. Huh? 1 second, 1 second. I don't know why it's showing a double screen. Huh? Is it okay now?
well. Yes, so actually I've shared my entire screen, so it will just go away when we switch to charts.
How
So
do I? 1 second. No, because I want the chart to cover the screen. Oh, there it's come. Perfect.
yeah,
Yeah.
great. So what I was saying is that let us understand one thing, that it is like a bucket that we have, and we
Okay.
have to optimize that whenever we are making any trade, either we are putting some water in the bucket, or we are taking out some water in the bucket. That is the dynamics, that the bucket, that the water is ever changing. That dynamic is always there. So what we need to do is that we have to optimize on one metric, which is that how fast can we fill the bucket, and how slow can we, how can we reduce um, the velocity of the water that is coming out of the bucket. That is the whole game, is what I understand. And when we keep on doing this activity again and again, then the amount in the water, amount of water in the bucket will increase. And when we do it again, so it will like compound, that our overall portfolio size will increase, and accordingly our position sizes will increase. When our position size will increase, accordingly our percentage of tranches will increase, and that will help us increase the returns further. So that is the whole idea of tranching, that if suppose we go all
Hmm.
in a position and we are setting a 10% stop loss. So what happens is that if we have invested 5% and that stop loss is getting hit, we are losing 0.5% of the capital. So this is where we are losing the capital. And if we keep on doing this thing very fast, say we take in a very volatile market, we say take 10 trades in which we have invested 5% at a time, and each time we are losing 0.5%. So it's like a double-edged sword. So what is happening is our overall portfolio size is decreasing by 0.5% or each time. And if we are not reducing our overall position size, suppose if we invest 50,000 in one go and we lose 5,000, if we do it 10 times, we will lose that entire 50,000.
Exactly.
So that is why it is important to limit the risk. That is the starting point. And that is why we do the tranching.
Yeah.
So now what happens is, in particular, volatile. So what we can do is that one, we can choose stocks which are relatively lesser volatile, or we can have very distanced tranching, or we can have some sort of pyramiding. So suppose if we take this scenario of Force Motors, so our first position would have been somewhere here, right? So let us discuss 2 to 3 concepts, which is of average buy price, stop loss, trailing stop loss, and risk and residual risk. So let us try to understand that with this chart. So
Yeah.
suppose this is a Force Motors chart.
Yeah.
The base started forming here. This would have been the first tranche that we would have taken.
Okay.
So
Right.
suppose we take our first tranche here. Next, as per the Ronchen channel system, we will take the second tranche here. Then we'll take the third tranche here. Then we'll take the fourth tranche here. And then we'll take the fifth tranche here, right? On
Right.
the weekly charts. So these are the points where we are buying the stock.
Yeah.
But if we take equal tranches in all these, so what will happen is there will be something called an average buy price. Let me represent the average buy price by, say, a blue line. So when let us have another line which can be a stop loss line, which would be an orange line. So first, let us try to discuss these concepts pictorially, and then we can also take help of the spreadsheet to understand it further. So suppose we take this first tranche here,
Hmm.
and let me measure this. And we take a 10% stop loss. So our stop loss was set somewhere here, right?
Okay.
So I invested, say, 1% here, and I am losing, the stop loss is not getting it. So I am saving on that 10% of 1%. And if it is hit, I just lose 10% of the 1%. That is the
Hmm.
starting point. Now, when I take the next tranche here, so what is happening is my average buy price, since both these tranches are equal, my average buy price, that is the blue line, will come somewhere in between. Right?
Okay, 1 minute. Why are we taking, sorry, so average buy price, as in you're saying of the two tranches?
So let us take it like this. So we took first tranche here, our stop loss was set here, our average, this is the blue line is the average buy price, orange line is the stop loss, and red line is whenever we are taking the position. So let us make this a green line. So that would be even better. So green is where we take the position, orange is where we are setting the stop loss, and blue is the average buy price. So when we take first tranche, these two will collide, right?
Yes.
We have just taken one tranche and these two will collide. Now,
Correct.
next when I take my second tranche at say somewhere here. So now what will happen is, since these two tranches, these both green lines are equal in weight, both are 1%, 1%. So my blue line will be here. So this will become my average buy price, right? If I have to keep the residual risk same, so I have to set the stop loss in such a way. So since we are trying to understand this pictorially, so let us see what is the gap between these two. The gap between these two is almost 9%, 10%, right? So what will happen is I have to set my stop loss in such a way that the combination of these two tranches, I am losing the same 10% of 1%, which is like, so what will happen is if I set, say, my stop loss somewhere here.
Can I just interrupt you here for a minute? So normally Vivek says that the second tranche, the quantum of the stop loss has to, in terms of rupee terms, has to be the same as the first tranche. Is that what he said? Correct.
Yes. So that is exactly the same thing. Since in this particular case, there is a gap of 10%. So if I trail my stop loss somewhere here, so what will happen is whenever the stop loss is hitting, so if the so this tranche will lose 10%, but this tranche, the first tranche, will not lose anything. Right? So my position size has, my exposure has doubled, but my risk is the same. So that is the concept of residual risk essentially.
I have a question here.
Yes.
So the first tranche had a SL of 10%, right? The next tranche, incidentally, and say 10 rupees was the rupee terms of the SL of the first tranche. Yes. Here also you're mapping it at 10 rupees is what you're saying.
Yes. So my risk is still the same of 10 rupees, but my exposure has increased.
So why is the gap between the first and the second tranche exactly 10 rupees? I didn't understand.
That is just a matter of chance. So that is just a matter of chance. Otherwise, we would have to tweak the stop loss accordingly. So using journal and using the exact price point, we can just see that where to set the stop losses and how to go about the pyramiding. So now what is happening is the stock is moving further up, and maybe we are taking a third tranche here.
Right.
So what will happen? My stop loss and average buy price will move further. So this was my average buy price, which was at like now 2% of the, this is double in weight because it is the average of two tranches. Now this is the third tranche. So what will happen is, suppose we have two balls. One is twice the weight. One is like say W, and one is 2W. So the center of gravity will be shifting towards the heavier weight, right?
Right.
So it is like a weighted average concept, right? So suppose this was my average buy price. This is twice the weight because this is now 2% average buy price of 2% position. This is 1%. So now my average buy price after taking this third tranche would be somewhere around, not here, but slightly shifted downwards.
Yeah.
Right?
So what is the green line above this blue line? What was that?
This is the third tranche that we have taken. So since we have taken the third tranche, now our average moving buy price, our average buy price will move slightly upwards, but it will not move that up because the average of these two was here, and then we are taking the weighted average between the last average buy price, which was here after the second tranche, and this tranche. So our now new average buy price will be here. So let us just try to understand the concept, and we can of course take help of journal to make the process easy. So now what is happening is that our average buy price is somewhere here. We are on the third tranche. Now, if I have to again keep my risk same, so I'll have to set my stop loss such that the bottom tranche is in some profit, this is in some loss, and then this is in some loss. So if we say set the stop loss somewhere here, so this is risking say 10%, this is risking 1%, and then this is helping us gain say 9%. Or maybe we can have it something like where so basically now our stop loss should be set in such a way that we are losing 10% again. So now since we are at 3% position, so
percent or 10 rupees if
same rupees we want to lose. So maybe our stop loss can be set somewhere here. Why? Because this will be approximately say 3% or so. So now this is the average buy price of three tranches. So this is like 3%, like 30,000 rupees have been invested now, and I want to lose the same 1,000 rupees. I risk the same. So just the 3% down move from this buy price will give me the same 1,000 rupees loss. So essentially, what I'm doing is I'm being cognizant of my average buy price, and I'm shifting the uh, stop loss accordingly. So this is the concept of trailing stop loss. So now what, let us try to take,
buy price and not the current buy price.
yes, so this is the average buy price. So as we keep on taking the tranches, what we will come to realize is, that as and when we are taking new tranches, our average buy price is going up, right? And we have to take a stop loss up, because if we do not do that, then our risk will increase. So not complicating the concept, what we are trying to understand is whenever we take a new tranche, our average buy price moves up, right? And we have to take the stop loss up so that we are not risking more. And now when we are on the fourth tranche, we would ideally want to break even. So in the fourth tranche, since all these are equal, my average buy price will be somewhere here, which is like 1, 2, 3, 4 lines of equal weightage. So almost in the center of all these lines. So now I would, if I want some sort of profit, I would set my stop loss above that. If I want to break even, I'll put it here. If I still want to risk some money, then I'll have to move it slightly lower than the average buy price, right? So these two lines are moving. This average buy price, the blue line, is the average of all these four buying points, and I am setting my stop loss according to my risk appetite. If I want a 10% profit, I can set it here. If I want a break even, I can set here. If I'm still wanting to risk some sort of amount and not wanting to exit the trade, so I might set it slightly lower. But I need to be cognizant of just one thing, that I'm not risking more money. That is it, right? So the thing is that our average buy price will be here. Now let us take the fifth tranche.
1 minute. I had a question here. So one is that the endeavor is always to keep the average price at the most optimum level, right? You don't want the price to go up too much, right?
Yes.
So that's why you manage your tranching like a pyramid, where your bottom is and then it just narrows up, right? That helps us.
Correct. So we're just pictorially trying to understand what is happening and why are we doing all these things. Then we'll come to the pyramiding, how to optimize it further, the different cases which are possible, and all those things. So when we are taking the
Vivek says basically first tranche is 10% as well, second tranche is same amount in rupees in terms of the first.
Yes.
Loss. Third onwards, we want you to be profitable.
Yes, correct. So accordingly, we can take a stop loss.
Right.
So when I've taken all these 5 tranches, so what will happen is my average buy price will be somewhere here, right?
Is that the optimum way to do it? That it should be at least half of the entire range of the buy prices, bottom tranche and
scenario when all these 4 lines are of equal weight, like all the positions are of 1% of our portfolio. In that case, our average buy price will be here. So accordingly, we can set the stop. So this was like more or less the concept of average buy price, trailing stop loss, and the position. So what we can do is, suppose if all these tranches were equal, our average buy price will be here after the fifth tranches, right?
Yes.
Suppose if this was heavy in weight and this was less in weight, so our average buy price will not be here, but it will be slightly lower.
Yes.
If
Yes.
this is even more overweight, it will be even lower. If we
Yes.
are taking just two tranches and not taking these three tranches, our average buy price will be here. And if we are taking just one tranche, our average buy price will be at our first tranche.
Initial price.
Correct. So what we are doing is essentially we are okay in increasing the exposure as and when the stock moves. Why? Because if I am taking a tranche here also, if I'm taking a tranche here also, if I'm taking a tranche here also, so my exposure is increasing, but I need to be cognizant of this average buy price, at where is my average buy price in during this process. So how can I do it? That is, one, we can take different weights in different tranches. Second is we can have a system. Suppose say this is a moving average. So suppose if I am taking this moving average as my trading system, and I'm setting my stop loss. So because I'm seeing that this stock is somewhere respecting this particular EMA. So until the price comes below this EMA, there is no point exiting, right?
Right.
So what I can see is that in my tranching, if my average buy price is below the EMA, so I'm okay, because that way I will at least ensure that my profit is not eroded, or my capital is not, my risk is basically not increasing, right?
That's an interesting concept. Basically, you're saying you would buy just a little. So let's say your Donchin or your Shaktiman new higher high
Hmm.
comes here, right?
Hmm.
Like you would just buy a little below that. So you would preempt that tranche addition.
No, no, I am buying here only, but I have to be cognizant that where my average buy price is, and accordingly we can tweak the percentage that we are taking in these tranches.
Okay. Okay. Can you demonstrate that?
Yes. So, so let us see, when we took first tranche here, then we took the second tranche here, our average buy price was somewhere here. So
Correct.
there was no point where this level was achieved except for this point. So when this is achieving, I am almost at break even. So for my first tranche, second tranche, essentially I am at break even, so I'm okay. So I'm just holding the position. Next, I'm buying a third position, where I'm buying the third position here. So my average buy price is somewhere here, and the price is not hitting my stop loss, so I'm riding it. Next, I'm buying here. Now my average buy price is moving further up. Again, the price is not hitting this. I'm still in profit, and my allocation has increased. So this tranche has compounded. This tranche has compounded. This tranche has compounded. So overall, my portfolio is in profit because this tranche has compounded, this tranche is compounding, even this tranche is compounding. Like each tranche is compounding. But since this stop loss is not hitting, my average buy price is below the EMA, and the stock is respecting this EMA. So I'm not risking much and I'm compounding. Next, I take this tranche. So my average buy price comes somewhere here. Again,
Is your stop loss here the EMA line, right?
yes. So essentially, we can set the stop loss in such a way that we can try to see the nature of the chart, that which EMA is it expecting? Is it respecting? Is it respecting the daily 11 EMA, or is it respecting the 20 daily EMA, or is it respecting the 50 daily EMA, or it is respecting the weekly EMAs? And again, we can see those 11, 20, 50, 100 EMAs, and we can see that which EMA is it respecting. So
Can you show us both the examples, right? In weekly and daily. As
yes.
in, so you're saying you take the entire trade only basis that, right? If the chart is looking nice in weekly and it's respecting a certain EMA and it's nicely going up, then you take that trade in weekly. Otherwise, you take
So,
it in daily.
so this is my active position. So I took the position, probably this was my first tranche. So this was my first tranche because it was on a good volume. This base was completed. There was a small base which was base breakout here as well. It was turning around. It was at good risk reward. So I took 1% position here, then 1%, then 1%, then 1%, then 1%, then 1%. So each time the initial, like the first tranche started compounding, and my risk was taken care of because my stop loss was set below the AMS, and still, even if that stop loss is hit, the position was in profit. So this happened because we chose a timeline correctly, which was the weekly timeline. If contrary to weekly timeline, if I would have switched to a daily timeline, so this daily EMA would have been breached several times.
What if you took the EMA below that as your stop loss? Below this
It would
EMA?
have been okay. Then it would have been okay. So if instead of 9 weekly EMA, say if we are changing this value to
G,
uh,
21,
say, say 15
15.
daily EMA, so still it is hitting. So maybe we let us take 20 daily EMA.
See, it's perfect.
So it is almost good. So if we
So
want to trade this in a daily chart, we would have to tweak our EMA accordingly.
yeah, but even now, if I ask you,
Hmm.
looking at the force models chart,
Hmm.
you also have to see the longevity of the trade and play, right?
Yes, so we have to project it somewhere that what are we expecting of this trade. So initially, in the first say 3 tranches or so, we are okay to lose that 1,000 rupees or 10 rupees, whatever we are risking. We are okay, and we are sitting silently until our first stop loss is hitting, because the chart is yet to play, and it has to tell us eventually that which EM is it actually respecting. So in our first initial 5 tranches, we can just follow the process as it is, and if we have to tranche further, then we can see that which EM is it respecting, and accordingly how do I need to tweak my tranches.
Talking about the first 2 tranches, right?
Yeah.
First 2
So,
tranches.
so I'll tell you what I do is that one is whenever I take a tranche. So now to simplify things, what we can do is, suppose whenever I take a position, I mark it with a line or with a circle on the chart.
Okay.
Coming back to the weekly chart because it will be cleaner. So one is that we mark our positions, where did we enter? That is the first thing. And we can mark it with circle or with lines, and we can have a color coding, say green lines. Whenever the position, whenever the settlement is happening in the demat account, at that particular point of time, it will show us the average buy price in our demat account. So we can simply mark it with a blue line. Instead of calculating manually, we can just check our kite account or demat accounts, and we can just put that blue line on the chart. We need
Okay.
not do anything, because suppose we are following a weekly Shaktiman strategy or an EMS strategy, we need not do anything, but at least it is important to mark that where our average buy price is, so that we can be cognizant that at no given point of time, under no given circumstance, that average buy price the stock is hitting is coming below that average buy price, and we are making losses, big losses, right?
Now, I want to understand one thing.
Hmm.
How would you contextualize the difference between the average buy price and your stop loss, which could be EMA or a particular number? They're different things, right? Stop loss is your EMA here, and your
Hmm.
average buy price is different. So I am saying, how would you, is the intersection of that your final stop loss? How do you look at it?
So ultimately, our aim is to one, not hit the stop loss too soon,
Mhm.
and not set it too below so that all our profits are eroded. So we have to try and maintain that balance. So one is understanding the time frame, on which time frame are we following. So what happens is that higher the time frame, smoother the chart. Say in this case, if we say daily chart, it is quite volatile. But
Yes.
if we say weekly chart, the noise has been reduced slightly. But if we take monthly chart, it is even less. So all of this is an uptrend, all of this is a downtrend, all of this is an uptrend. So higher we go in the time frame, lesser is the noise, and a good optimized time frame is a weekly time frame,
Right.
because the noise is lesser, but the action is still there, because these price
Right.
movements happen relatively quick, but the noise is lesser. And otherwise, if we see that some stocks are moving like say 50% in a week or so, then of course we have to follow the daily time frame, because otherwise it might be an issue to tranche up and do all these things. So this was more majorly about the concept of average buy price, trailing stop loss, and tranching, right? So the
Normally, you're
starting point is that tranching is essential,
one
because
question.
otherwise our risk will increase.
Okay.
But we can optimize on that tranching so that our average buy price is below. The more lower it is, the lesser probability of it getting hit, and the more chances of the profitability. So that is second part.
Just one
Now,
question.
yeah,
Just one question. Just go back to the chart.
hmm,
So, like, let's say you've taken the last tranche up, the one up. Okay.
this one,
There. Yeah. Right
hmm,
on top. Okay.
here,
Yeah.
yes,
Yeah. You've taken that tranche.
yes,
Now, your average buy price probably has moved up a little bit.
yes,
And EMA is still far, right?
yes,
But you'll never let it hit your average buy price, because your EMA normally will be above the average buy price.
yes,
What so I'm asking you that even sometimes, like, see, the EMA here is very far from the candle.
yes,
If you look at it in percentage terms, I'm sure it's more than 10%.
yes. It should be. Let us see.
How do you put your Excel over here?
This is like 30%. So one is that it might now not be respecting this 20 EMA. It might be respecting some 9 EMA. Yes.
Okay.
So by
Okay.
tweaking that setting, we can see that which EMA it is actually respecting, and accordingly we can set the stop loss somewhere below this.
Okay, so what you're saying essentially is that when a chart moves up and the EMS kind of move, the one that you respected earlier has a long distance, then you tighten your SL by just moving to a higher EMA, seeing if it's respecting that.
Yes.
That's what you do.
Yes. So a good indicator for that is EMA band.
Band.
Or,
Yeah. Yeah, I have the EMA band only with me. So I have like 5-6 EMAs which I have on my chart, and then I can
yes.
see.
Yes. So since we are sharing the, let me share this screen.
Perfect.
Come back to the same example of force motors.
Yeah. Okay.
So basically, we are using a band, and what I have done is I have color coded these as cyan, magenta, yellow, and black. CMYK. Just to remember the sequence. So cyan being the fastest, magenta being slower, this being still slow, and this being very slower. So what it essentially gives us is it gives us multiple options of EMS that the stock might be respecting on a daily time frame. And when we switch to weekly, we again see the that which EMA is it respecting. And second thing is that it also gives us a divergence. The more divergence here, the stronger the trend. When the trend is weaker, the divergence is less. When the divergence is more, the trend is stronger. So like in Shaktiman, we get A, B, C, right? Stronger the trend, that value changes. So accordingly, this divergence can help us guess at what is the trend strength overall. And for taking early positions also, we can see that at this point, or maybe at this point, all the EMS were resolved. Like C was above M, M was above Y, Y was above K. That means 11 is above 20, 20 is above 50, 50 is above 100. So that means the EMS have been resolved, and then uptrend has been started. So instead of waiting for this breakout, just by seeing this divergence, we could have at least initiated a position at least here. And then we could have followed these EMS for setting a stop losses.
Okay. No, I just want to ask that convergence which is there,
Hmm.
green candle is, would that be your signal also?
Yes, this would also be in a way, because ultimately what how I look at these EMAs is that if it is a weekly EMA, it is stronger than a daily EMA, and this is like the fastest, this is the slowest. So what will essentially happen is that whenever an up move is happening, it will respect some of the EMS. So at this particular point, it is actually respecting all the three EMAs are below the price, right? So even if it has to respect not 11 EMA but 50 EMA, my risk would be 20% if I set my stop loss here. So if I had to initiate a position here and set the stop loss here, which is, let us make this orange since it's a stop loss. So if I set a stop loss below all the EMAs, right? So there will be very less chance of the price coming and hitting the stop loss. But since it is currently at 20%, so maybe I could have taken a smaller position instead of 1%, because it is below the breakout point. It is at a 20% distance from my buying price. So my position size could have been reduced to again keep that risk constant. And when I see that, okay, it is coming down and it is again going up and it has started to respect the seam, and then maybe I could have completed my 0.5% here, 0.5% here. Again, my 1% would be at the same level, but my risk would have been much lesser, because now I understand that it is respecting the CMA, and now I can trail my stop loss here. So if I take 0.5 here and 0.5 here, it is still the same, but my risk is less, because now I know that it is respecting these EMAs. So I can set a stop loss at, say, much lesser than 20%, or even if I set it here, it would be fine at 10%. So now maybe I can complete my 1% here, and then maybe I can take another 1% here, 1% here, and similarly I can see take the position.
The only thing I did not understand in this is that why would you look at 20% in the beginning? That's way too much for a position.
Yes. So since it is a low cheat, so it has a high risk. So that is why I would have reduced my position size. So that is why Vivek sir says that in the low cheat area, it is a risky thing. Why? Because of these parameters. That EMIs are not completely resolved. We do not know which EMIs will it respect. We do not even know if this trend will continue or it will falter. So for all those higher probability of losing the money, we are reducing the position size. So that is why it is not advisable to take a 20% position here, a 2% position here, but a 0.25, 0.5%. I could have taken a 2%, 1% position in one case when I go to my daily chart and I see that there is a base breakout here with improved volumes.
Correct.
If I see there is a gap up, there are parabolic volumes, there is a small base breakout. So if I treat this as a pivot, and now if I have to take 1% position, I have to set a stop loss somewhere 10% here and respect it. Then I can take a 1% position. If I am able to find an alternate stop loss position on a daily chart, then I can take a 1% position. Otherwise, it would be prudent to take a smaller position of 0.25, 0.5%, and then gradually average up there. Make sense?
1 minute. Let me just recalibrate what you just said. So you said that on the daily chart, I will take a. Can you just repeat the last statement that you said again? The daily
Yes.
and the.
So I am saying that in the daily chart, we can see that these are like small bases which are being formed. This is a base, this is a breakout, this is a base, this is a breakout, right? And this is a base, then this is the breakout for that. So if I'm taking any of the small base breakouts, then I can see what where the pivot is forming. Suppose here the pivot formed here. It is almost like a cup and handle kind of pattern here, right? Cup and then handle. So if I am considering this to be a cup and handle breakout and there is a small volume confirmation also here, then I should consider this point as pivot and I should trail slightly below my pivot like we do generally in case of base breakout. So instead of considering this as a base completion pattern, I should then consider this as a base breakout pattern, set my stop loss accordingly. Only then I can take a higher percentage of tranche. Otherwise, it would be prudent to just take a smaller tranche and follow the weekly EMS or weekly Shaktiman. And right from there.
Revathi, you have any questions?
No, not as I said. I'm just. You please carry on.
Okay. So this was more like a pictorial representation of the things. So to simplify life,
On a very big picture level, Nimish, as I said, I'm not getting very technical. I'm not yet in that zone at this point in time. But what I'd like to ask you is, this particular chart. I mean, of course, you've explained it beautifully. I'm sure I will go through the recording to understand it a little more in detail. But so this is, of course, a stabler company, not very volatile. A classic case of it's not like an SME kind of a space, etc., etc.
Yes.
So most of your bets happen in these kind of companies, as in companies which are relatively more stable, who are seeing a kind of a focus. Force had a defense story and things like that, and you would have taken the call.
Correct. So instead of taking like restricting myself to large caps and mid caps as such, what I try to do is I try to stack probabilities, and I have a habit of seeing a lot of charts. So whenever somebody posts anything or I come across anything, or when I scroll through my watch list, I see that this has gone 5%. So maybe I'll just go and see what is happening.
You have been extremely good. See, I think, Nimish, you are one of the people who are not only very good in stock selection, but of course you know how to ace the math game. But because I think most of your stocks are amongst the earlier, I think Force Motors, you probably did it maybe along with Vivek or maybe earlier than that, if I'm not mistaken.
Yes, somewhere here I bought. Yes.
Sorry?
Yes, somewhere here I bought at the low cheat.
Yeah. So, and you, of course, so that would have been based on the good quality of the company, I would presume.
Yes, yes. So what we can do is, what I usually do is, like Vivek sir says, that we have to stack up the probabilities. What is the market condition? If the market condition is not good, I will never start with 1% tranche. I should start with 0.25, 0.5% only, even if I know everything else is looking good. But just because that probability is not stacking, So that is why we should reduce our position size. So it is just like that. If all the odds are in our favor, so we can have higher base, like a stronger base or a heavier base. If the probabilities are not getting stacked in our favor, so maybe we can take smaller position sizes.
Okay, can we look at the GRSE chart?
Yes.
Yeah.
Now tell me, how should, like, I mean, I did the normal tranching. I was full 5% allocated,
Yes.
but I lost all my profits.
Yes. So in GRSC, I exited yesterday. The only reason was,
Before yesterday.
yes. So my stop loss was somewhere around 2750 something, and I got stopped out. Let us see here.
Can you show me exactly how you did your stop loss tranching here?
Yes.
Tranching and stop loss, and what percentages you did in terms of movement. See, this is a long-term story. We were all hoping this would be a story. So we are playing this clearly on weekly,
Correct.
right? What EMA are you playing this on? The 10
It might very well happen, Pooja, that it might be respecting this magenta EMA, right? But as of now, it has breached the blue EMA, and my stop loss was here. It was like a strict stop loss. Why? Because I took my first position here. Maybe no, I took my first position here, then second here, third, fourth, fifth. So my average buy price was somewhere here. I was in decent profits, and then it started to tumble down. So I was expecting that it will respect these daily EMAs first. So what is happening that before the weekly EMA go down, the daily will go down first. So it first breached this EMA, then this EMA. So I set my stop loss below the third EMA. So how I look at it is that if the story is continuing, it should respect first EMA. If it is slightly weaker, it should respect second. If it is even more weaker, it should respect the third EMA. And if it is very weak, it should respect the fourth EMA. So as and those EMAs get start getting breached, so I just become more alert. So since I saw that these EMAs are getting breached, I hoped that it will probably respect the CMA, and I set my stop loss just below it. And this was like my hard stop loss. I did not want to get out of this position because it might very well happen that this is a kind of pullback, but even for a pullback, it has come slightly down. So mostly it might consolidate for a lot of time here because it did not take support, and it was not like a pullback, but it breached that pullback. So it might happen that it might come down to the magenta EMA, and then it starts to bounce, or it simply starts consolidating here. So for all those logical reasons, I had set my stop loss somewhere here, and as it got triggered, I was happy. Why? Because I did not have funds available to invest in the newer ideas like VIP Industries, Candid, and all those. So if this got hit, it is okay. I will detach myself from this company till the time I have funds and this is in my buying zone. Till that time, I will detach from this company, and I simply switched on to VIP and went it.
My pain point in DRSC is I was almost in 30% profit. And when I booked out, it was some 9-10% profit. My question is, how should I have saved that profit?
Yes.
From a trailing SL perspective.
Correct. So what we need to see, let us and try to discuss another concept, which is of positive and negative compounding.
Okay. We are not digressing, right? I'm just asking you on the trade because that's where the...
That's okay. That's okay. So this concept of positive and negative compounding is also very important to understand. Suppose if we took positions like this.
Okay.
Supposing these were equal in weightage, just to make life easier.
Keep it simple, yeah.
Yeah. So probably this would have been a first average buy price. Then this would have been a second average buy price. Then our average buy price would have been somewhere, say here.
Okay. Got it.
Right. So what I need to see is at any particular given point of time, how are my tranches looking? And how far it is from the current price. So when the price is moving up, here this was when the price hit here, I was at break even. When it came here, this tranche compounded positively. When the price came here, this was in profit.
It also was in profit.
Second was in profit. Third was break even, right?
Yes.
Now, when the price came here, so this was in profit, this was in profit, this was in profit, this was at break even. When the price came here, all four were in profit, this was in break even. When it moved further up, all five were in profit. But when it started coming down, now let us see what happened when it started coming down. So when the price was at this level, again all the five were currently positive. But when the price was at this level, this first tranche started negative compounding.
Sorry, I had to just check.
Yes, Pooja, no worries. So let us see the price movement after this scandal. Till here, life was good, everything was in profit, we
Was
were
good.
good, and all good. Now it started consolidating here. Now, when the price closed here on a weekly time frame, so again everything is in profit. When it closed here, so my last tranche was in slight loss, and
Loss.
the four were in positive. When it came here, so this was in how much percentage of loss this tranche? Almost 6-7% in loss. Other tranches were profitable, which is also okay. But when it came here,
Yes.
so here what happened that this was also in 10% loss, and this was also in some 4-5% loss.
Yes. Correct.
These positions which were initially at say 100% profit, the profit has reduced to 55%.
Exactly.
So that sudden fall comes because now these tranches have started negative compounding, and the profit for these tranches have started to decrease.
Yes.
So now if it further goes down, suppose the price comes here, so now 1, 2, 3 tranches will have negative compounding, only 2 will have positive. So we might end up in actually making loss in this position.
Close.
And the more we hold, the more loss it will be if it starts coming down. So that is why it is important to one be cognizant of the average buy price. Suppose my average buy price was here, and I am believe in the story, and I have a long term horizon of 2 years. So maybe you can trail your stop loss here, expecting that you will be in Zen mode, even if all your notional profits are gone. Because what might happen is this. What might happen is it might come down, respect this, do like this, consolidate, and then it goes up. This might happen very well in this case.
Okay, I have a suggestion here.
Yeah.
If I exited 50% at the top,
Hmm.
when the first red candle happened,
Hmm.
after that the second green candle happened, and then the second red candle happened.
Hmm.
At that point, I exited 50%.
Yes.
Right. And then I entered again at the pullback when it starts reversing.
So
50%.
that might be a good strategy, but here you need to be cognizant of one thing, which is first in, first out. So what happens is whenever we sell a position, the first one that we bought will be taken out first.
Right.
So notionally, you will see a lot of fluctuation in your demat account. So that is why journaling and all these things are important, because what will happen is suppose you exited 50% here, that means you have you have sold these two tranches. So ideally, you would have booked good amount of profit in these two tranches.
Yes.
You would have booked a good amount of profit in these two tranches. In demat, you will have this profit, but your average buy price will now be average of these three. So your average buy price will be here, and suddenly that 50% position will look in deep red.
But what will happen is that because I'm catching the second, so the thing what I want to ask you is, suppose I add back at the pullback, or maybe a little reversal from the pullback. Should I add back 50% again, or should I again add back 1, 2? I mean, should I add back 2.5, which I've exited, or should I add back 1%, then again let it go up, and then again add 1%? How is the ideal way to tranche a position like that?
So
Tranche back.
what we can do is that we can have a good pyramid kind of averaging up. So averaging up is again important. We cannot at no given point we should risk our position, because it might very well consolidate and go up, or it might start falling down. Also, we have seen it a multiple times happening. So we can never go back again in full. If you are confident that okay, now it has respected the CMA and you are seeing some sort of pullback and you are confident with that pullback, so maybe we can take 2% of tranche.
So we
And
have 2.5%, we're adding back 2, and then we will add 0.5, 0.5 maybe.
yes, correct. So next, after discussing this concept of positive and negative compounding, what we need to be aware of is that what is our average buy price, so that we are aware that our average buy price is where, what is the current price, where is our stop loss, and we are trying to avoid this negative compounding. The only reason I sold this stock, or my stop loss, strict stop loss was set here, is because I know that now two tranches have gone in negative at this
Exactly.
price, but these three tranches will be in positive. So at least I have some 15-18% of profit in this position, which I can rotate and re-enter in this position if that this pullback is successful.
Point of time. Right. So
So
what you're
just
supposed to
because
do,
of this math, I set my stop loss here. No other reason. Otherwise, I would have waited for this to come back, and I would have either waited for Shaktiman to trigger red, or otherwise I would have simply waited for the exit to trigger on a weekly closing basis.
just to kind of recap, the holy grail here is
Hmm.
that the moment two of your tranches
Hmm.
go into significant loss, it's
Hmm.
time to take some action, right?
Yes, yes, yes. So at least what we can do is we can mark our positions on chart. That is first thing. Second
Yes.
thing is we can mark our average buy price, and third thing is we can mark our trailing stop loss in say orange color, and we can set it in such a way, the stop loss, that it is below some sort of logical level, that it is some sort of EMA on daily or weekly. Like in this case it was below 3 EMS, in this case it was below the fastest moving average, and only two positions were making loss but three were in positive. So accordingly we can set a level, and we can then I set a GTT for this trade because this was my strict stop loss. So for strict stop losses, I set a GTT that if it gets triggered, no emotion attached, I will come out. Then I'll see how the price is stabilizing. Is it a pullback? Is it going up? And again, I'll start my process, or I'll simply switch to another stock.
Okay. So why did you not sell? I would ask you, why would you not sell 50% and then keep adding back?
So I do not sell 50% at any given point of time, because there are two ways to look at it. Either I just bought it one, like full position at one go, and then I sell 50%, then it will make sense. Or if I buy in staggering, I want to sell in one go. If I buy in staggered manner, and if I sell in staggered manner, no, the math is very complicated.
That's what I want to ask you. I find it complicated, but why I do this sell to strength? Because Nimish, any position you're taking for the long term, or
Yes.
any position, if you book say 20-25% profit
Hmm.
at the beginning,
Hmm.
then if you let it ride, let it run,
Hmm.
you can probably take little more loss
Hmm.
and let it run for a longer period.
Hmm.
So I'm just saying these are different approaches. I'm just trying to understand, how does the math work in these approaches? See, I'm doing it from a
Yes.
pure logic, but how does this work in your journal, in your net profits? What is
Yes. Yes.
what is the best way to approach these three strategies based on different kind of charts?
Got it. So I think let us switch to the Excels now and the journals.
Okay.
Uh, so this is the pyramiding sheet that I created. So I'll share the link also with you guys. And then we have the classic journal. So let me see. So in general, basically, whenever we set that stop loss price, no, so it gives us that what is the residual risk in green and red. So accordingly, we can change the price and see if we want to book 50% or we want to book 100%, or where we want to set a stop losses, or how many positions, and that is. So let us just quickly check out this sheet. So in this, what I have done is that I have
Can you enlarge the sheet a bit? Is it possible to enlarge it?
yes.
Yeah, thank
Is
you.
it fine now?
Yeah, now it's better.
So what I have assumed here is that each tranche has been taken after a 10% move. That is the assumption. And that same has been compared with different stock moves ranging from 50% to 300%. So let us just look at this scenario, what happens.
Can you explain the last statement?
Yes. So what we have assumed is that there is a stock which is moving 50% or 75 or 100 or 150, 200, or there is a 200%. So this should be 200. So we are just trying to understand different scenarios. There is a stock which moves 50%, or it can move 75, or it can move 100, 150, or it can move 200%. So if the stock moves between any of these cases. So how will our profits look when we change our tranching technique? So that is what we are trying to understand. And a
Fair.
second assumption we have taken in this experiment is that every subsequent tranche has been taken after 10% up move, right?
Yeah.
So in the first case, we have taken 1% tranches. Just give me a moment. All equal tranches. First tranche at 100 rupees, then at 110, then at 121, 133, 146. So these are just 10% increment prices.
Right.
And we bought the same value, 10,000 rupees value stock we bought. And accordingly, the quantity was got calculated that if we bought it 146, we bought 68 to get the same value. If we bought it 133 rupees, we bought 75 to get this 10,000 rupees. I think this is self-explanatory. Now let us see what happens if there's a 50% move. The price of the current price of the stock is 150 rupees. If there's a 75% move, it will be 175, 200, 250, and 300 respectively. Right. So now let us try to understand what is happening in terms of unrealized profit in each tranche.
Right.
Maybe we can freeze the columns also. Cool. So now let us try to understand what is happening for each tranche. I'm sorry, I'm zooming out. Yeah. So for each tranche, what is happening? Since we have took equal percentage, no. So this at 50% after 50% move, this will be in 5,000 rupees profit. This will be in 245 rupees. This will be 1270, and accordingly. So this will have more profit because this was bought at lower price, and this will have lesser profit because this was brought at a higher price.
Yeah.
Now, if the stock is moving 75%, so all of them will be in profit, and if accordingly, if the move is increasing, all the profits are increasing. Our final profit would be the sum of these. So it is like each tranche is compounding. The first tranche is compounding this much, second this much, third this much, fourth this much, fifth this much, right? And the sum of all this will be our actual unrealized profit. This is clear?
Yes.
My question, Nimish, is that when you're taking your assumption of 50% up move, isn't that in reality, the way it goes is, okay, you've done 10%, okay, so 100 has become 110. Then you're saying the current price up move, that means at a later point in time. So obviously everything is only going to be in positive, right? Unrealized profits.
Yes.
So we are not seeing the variability as we're discussing in the charts.
So we have an investing system where we try to cap our risk to single digit, maintain residual risk, set stop losses. So what I'm assuming is that there are like just 4 cases which are possible in a portfolio, right? Small losses, small profits, big losses, big profits. Otherwise, break even. So if the stop losses are being set correctly and we are exiting on those stop losses, we will either have small profits or small losses. What we are trying to optimize for is our big winners. How are we optimizing for our big winners? Because that will only move the needle. Anyway, we are not making big losses. That is out of the question because of this kind of system we follow. Stop losses and small losses and small profits will take care of themselves. We are just trying to optimize for returns by optimizing for our winners. So a winner will be something which moves at least 50%, and we are able to book at this 50% move. That will be a winner for us.
Okay.
So assuming that.
So am I okay? Sorry to interrupt, but am I understanding correctly that what you are showcasing in this Excel sheet is that I have a winning stock?
Yes.
What tranche? What should be the weightage of my tranche, which would maximize? I mean, given that maybe in the initially I might not know. So initially my tranche might be 1% or 1.5%. But how can I optimize my profits given that I am more or less after the first or second tranche, I know it's a winning stock? Is that the objective of this chart? Because this chart will only give me unrealized profits, right? It's not giving me losses at this stage because the way the chart is structured. Okay, sure.
So another thing that what I'm trying to, why are we doing this exercise or why we can take help of this calculator is, that our starting point was that many times we tend to invest in one go, right? What is the thought process behind that? The thought process is that we want to maximize our profits, right? But my thesis is that we should never go invest in one go. Why? Because that is also increasing inherently the risk. And again,
Right.
we want to have more water in our bucket. So we want to cap the leakage also. So what
Correct.
we're trying to understand is that just by having a different kind of pyramiding strategy or different kind of tranching strategy, how can we bump up the profits?
Right. While
Right?
keeping risk in check, because that risk
While
is a
keeping
risk.
risk in check, how can we maximize the profit? So that is what we're trying to optimize for.
Sure, sure.
So just to make the life easy, I have added these rows also, which are the total of the profit that we have.
Okay.
So as we go down, you see the profits will vary with the tranching technique. The high,
Can you just run us through your tranching technique? That's all.
yes.
The
So the
difference.
tranches can be taken either 1%, 1%, 1%, 1%, or we can have first tranches 1.5, 1.25, 1.75, 0.5. This could be second scenario. Third case could be this 1.8, 1.2, 1.82, right? Then 1.7, 1.2. So this is an exercise that I also had to do because I did not know which one is the best, because there could be multiple ways of doing it. So thanks to you guys, because of which I created a sheet, and now later we'll figure out together which one is the most optimized. Then we can take a 2%. Yeah.
That 0.25% that we do in ETF, right? Sometimes we take the cheap 0.25%.
Yes, yes.
Then we'll do 0.75%. Then
Yes.
pyramid.
Yes. That also we'll, okay, let us quickly see that. So why we do that, and why it is not a bad approach. In fact, it is a very good approach, because suppose we take this example. So what we would have done is we would have taken 0.25 somewhere here. Now, if this breakout was not successful, ideally this handle kind of formation that we are seeing here would have started somewhere here itself. It would have started somewhere here itself.
Correct.
Like this, right?
Right.
So since I took just 0.25 and my stop loss got hit, my risk was really capped at very small level, right? But when I'm taking 0.75 after the breakout, so I have more confirmation that the breakout is successful. So that is why I'm taking 0.75 here, 0.25 here. What will my average buy price be? It will be almost here, 1%. So instead of considering it that I took a very small first tranche, my average buy price will slightly go up. But one, I have more confirmation. Second, my risk will be mitigated. And now in the longer run, this will essentially be my 1%, which will not really matter if I took it here or here, because in terms of percentage, it is a very small move. Right?
Okay, at least you're profitable in your first tranche.
Yes, so we want to be want to have very less risk in a first tranche, especially when this breakout might fail or it might form a hack. So just for capping that, we are taking 0.25, 0.7. If you would have taken a tranche here, so we could have taken a 0.25, 0.75 here, completed a 1% here, then taken 0.25, 0.7 here, completed 1%. It will again be the same 1%, 1%, 1%, 1%, 1%, right? So assuming that we took the tranche either in one go in 1% or in two goes 0.25, 0.75. But ultimately, we took this 1%. That is our assumption. It might be in two tranches, it might be tracking position, completing the tranche, or it might be straight away we took 1%, right?
So what you're saying is
Yeah.
essentially it is 1%. We just split it in the same weekly candle.
Yes,
एक
yes.
Monday को ले लिया, एक Friday को ले लिया.
Yes, yes, exactly.
Even out हो जाता है उसका average
तो ऐसा
price.
भी कर सकते हैं कि हमने मॉर्निंग 9:15 पे 0.5 ले लिया, देन 3:30 क्लोजिंग पे हमने एक और 0.5 ले लिया, एक्सपेक्टिंग सीइंग के क्या डिफरेंस है. एंड मेनी टाइम्स इट आल्सो हेल्प्स, क्योंकि कई बार प्राइस हमको लोअर मिल जाता है तो हमारा एवरेज बाय प्राइस नीचे ही चला जाता है. तो जब भी हमें डाउट है, पोजीशन साइज कम करना है, जब भी हमें कॉन्फिडेंस है बढ़ाना है, दैट्स इट.
और ये 0.25, 0.75 लेके then you continue your normal. Only thing is what I want to ask you is when we start with 0.25 and then our base is never very big. फिर वो 1% का तुमको कम ही करते जाना पड़ेगा ना.
Correct. So what we can do is, Pooja ji, that since we have been in the markets for some time, we know what kind of fundamental triggers are there, what kind of companies are. कहीं ना कहीं पे समझ में आ जाता है that this breakout is going to happen, this is going to fail. Yeah, this is a risky breakout, this is a confident breakout. So whenever we have confidence in the breakout, or we have the confidence in the story, we know the fundamental trigger that is playing out. So instead of 0.25, 0.75, we can take 0.5 and 1, or we can have 1 and 2, or we can have 0.5 and then 1.5, right?
Okay. But what happens is, like, say the current markets, Nimish, these are choppy markets. A lot of breakouts are failing.
Yes.
Even if the chart is good, everything is good. Breakouts are failing. It's just spotting. And then it's tightening sometimes below, and sometimes it's just coming down. You know.
Correct.
So what is happening in only these markets? So then how do you, then you don't have the confidence to take that 1%.
Yes. So another thing that I have come to realize after some sort of experience is that whenever the market is choppy, it is good to play base completion patterns instead of breakouts. Why? Because people are focusing on breakout. So people have more focus on breakout, and very less investors are accumulating in the low cheat areas or in the base completion patterns.
Like a VIP, which is why
Yes. So instead of playing breakouts, maybe we can play the low cheat areas in this, and this will give us an additional confirmation and time. So instead of sitting completely out of the market, maybe we can have a tracking positions in the low areas.
And so, like, for example, just, I mean, you can open the SML Isuzu chart. I played that one.
Yes.
So now SML Isuzu, just switch it on. I played it actually on daily.
Yes.
Because it was moving very aggressively.
Very aggressively, correct.
So now I have exited 50% today. I was full 5%. So now I'm thinking, अब क्या? Because see, अब इसको कैसे खेले?
Correct. So this is essentially a re-rating that has happened, right? Earning में कुछ change नहीं हुआ है. This is just re-rating which has happened. So what will happen is re-rating will get completed. It will enter a distribution phase, and then the earnings will decide the next trajectory if it is going to move up or stay sideways or go down, right? So 50% आपने re-rating पे खेल लिया, 50% आप earnings पे छोड़ दो. So that is how you can play. कि आप इसमें weekly शक्तिमान लगा लो, and you can just follow weekly शक्तिमान for the 50% of it.
Basically, once the earnings come out, basis that I see if it tightens. Now I have 2.5% left, so I buy 2% straight on the parcel and then touch up. See, because
otherwise you can just see the EMAs and maybe you can set your stop loss somewhere here, or you can have a band of EMAs and set it even lower. But at least it is good to have some sort of mental stop loss levels. Yeah. It might be very broad if we are fundamentally very convinced. It might be very loose stop loss. If we are fundamentally convinced, if we are not, or if we are just playing the re-rating, we can have a tight stop loss. But it is important to have a stop loss for one reason, that we need to respect the maths. The main thing Revathi ji was telling me initially, that fundamentally everything is looking good, still the profits are varying. That is because of the math, not because of the stock or because of anything else, but only because of the math.
And the reason why I think, maybe this is why I'm giving you my rationale for booking 50% is one, like, say, you can create that capital for other allocations. So you booked, say, 25-30% profit on half, and now you have that money to put somewhere else when it consolidates. So you're actually using your funds well. Two is because this is a long-term story. It's a 2-year story. So the way my rationale for this is that I will keep doing this.
Correct.
Keep adding 50% back, booking it. And over a period of time, I have a friend who's actually created humongous returns in this way.
Yes. So that is a great approach, because you have booked your profits and you are participating in the upside also. So that is great. Yes.
So my question to you here is it more prudent to book the entire tranche because it's going to consolidate now, the entire allocation, or should you keep that 2.5%?
My only thought is that it should be an objective decision. So what will happen is that if we are not churning fast, we are staying invested for long. That is also okay. If we are getting out fast, we are doing more churning. We are earning less, but we are churning more. So that is also okay. But it should be an objective and consistent call.
So what I want to understand again here is that, let's say I do this consistently.
Yes.
Okay. The only thing is that 2.5% which I have, which is going to now consolidate for a bit. My mind is like, should I have even exited that so that I could have put it somewhere else?
See, it might consolidate, it might not consolidate because currently it is well above the daily 9 EMA also, which is a very fast EMA. So until it breaches 9 EMA, how can we say it will consolidate or it will move further up?
Because it's been a 45-degree up on daily. And it's been too much. See, if you look at any chart, वो थोड़ा consolidate होता ही है. And then it goes up.
Yes, it can very well. But my thing is, instead of preempting that, if you are selling in strength, it is wonderful. That is definitely a very good strategy. But even selling here is almost like selling in strength, just below the EMA.
Why would I wait for that profit to come down that much and then sell?
So in that case, I think 50% is good enough. What you can just do is you can just go to your journal and see that what will happen. So the only thing is there is nothing right or wrong. It is just that we should always question that why are we doing what we are doing. So you are clear about this thing that you want to maximize on the profits of at least 50% of your position. So you're sold in strength, you are happy. So you should not regret even if it goes further up because you have 50% invested. So that is your strategy, which is great.
It's about 50%.
Yeah.
My question always comes where I send the entire thing. See, because the thing is, वो थोड़ा भी consolidation में जाता है तो I feel वो पैसे फिर waste जा रहे हैं, वो तो ऐसे ही बैठे हैं.
So that
is how I think.
So maybe in that case, what you can see is that only if you have a good idea.
Yeah.
Only if you have a good idea to churn, then maybe you can sell it. That could be one way to look at it. Second way to look at it is that whenever we are booking more profits or selling, complete position in loss, it is great. But what will happen is that you'll have to start afresh. So what will happen is till we get our next SML Isuzu, it might also double from here. So there are now two things. You have sold this position, you are investing this position in the new stock. There are again 50% chances of making money or losing money. So essentially we are cutting our winner in a way, not objectively, just because it has given us good profit. So a 10x stock will start from a 2x journey, right? So it might very well happen that in hands of M&M, Mahindra and Mahindra, this company might 50x from here. I'm not saying it will. It might very well start coming down tomorrow. But we need to understand, are we playing the 2x game or are we also playing the 10x, 50x game? That is the only thing we need to ask ourselves.
So what I want to do is book profits along the way, but still keep my skin in the game, which is why I've kept the 2.5%.
Yes. So I think it is great strategy that you book 50% and 50% you are invested, and then you can see what happens to that 50%. If it again forms a base and again gives a breakout, you can reinvest your 50%. That is also a possibility.
So I wanted to ask you from a journal perspective, how does the math work out? That's what I wanted to understand.
Yes. तो एक बार अपन quickly ये भी देख लेते हैं price, फिर अपन maybe practically journal खोल के we can.
Let me just check with you. It's lunchtime, Nimish, and you are a family man. You have a kid and a wife. We cannot hide time like that. We can continue this if you want next week or something, or tomorrow.
Totally. So
to go to.
Got it. So maybe I think 10 minutes or so we should be in a position to wrap up this discussion, because we have seen that what practically happens pictorially we have seen. And let us just see this pyramid, and I'll also share this pyramiding sheet. So you basically just can have a look at different scenarios and choose your pyramiding strategy. So that I think will be fine, because one is we are not here to write PhD thesis, but just to simplify our process and maximize. That's the only thing.
From you, कि ये strategy में ये work कर रहा है क्या? I mean, for me,
so
the
please just two key takeaways if you have to take from this session is: one, we should always be cognizant of our average buy price and check for negative compounding. जैसे GRSC में आपने बोला कि GRSC में negative compounding start हो गई थी. So we need to be cognizant of that. Second is to lower our average buy price, what kind of different pyramiding techniques could be there to optimize optimize for maximum returns. तो basically इसमें अपन ने किया क्या है कि this assumption is clear that tranching हम 5% position ले रहे हैं, हर position next 10% move पे ले रहे हैं. So that way these becomes our buying price, and our buying value changes with the changing percentage. कि अगर हमने को ये pyramiding करनी थी, we had to buy 17,000, 12,000, 11,000, 9,000, 1,000 for respecting this tranching technique. And at any particular given move, that after 50% move, this will be the current price. At 75%, this will be the current price, and so on. And our unrealized profit will be depending on what price and how many stocks we bought. So accordingly, our profit level for each tranche will change with different kind of moves, right?
I have one small question here. Sorry, I'm interrupting you. So SML is to moved up very quickly on daily. If I'm playing it on daily, then should I keep a 10% gap? Or should I keep
No, you can keep it 20%, but you'll have to tweak the values accordingly.
No, but the ideal way to do it, if I want to get most out of a stock which moves very quickly in daily, should I keep it 5% between each tranche or 10 or 15? What is the ideal way to do this?
For me, I have always believed in adding upon launch channel highs. Why? Because it gives us a and solid green candle. So what I'm hunting for is not returns. I'm just hunting for solid candles. Whenever I get a solid candle and I know I am avoiding negative compounding, my stop loss is set correctly. So I just want to increase my exposure on each solid green candle because it gives us a pictorial representation of a one-sided demand. So whenever my one-sided demand is appearing in the chart, I just want to increase my exposure. That is my thought process.
So you don't use Shaktiman addition?
I use Shaktiman always.
Always, no? The one with the flag on top, or just the dot?
Yes. So this is my this is the setup I use. A very simple setup: Shaktiman and EMS. That's it. EMA bands and Shaktiman. So I use these EMA bands just to understand the stock movement and set my stop losses accordingly. But if my stop loss is not getting hit, I am okay in riding any position on weekly Shaktiman.
Okay. Got it.
So this is what I follow. And second thing is that So coming back to the tranching technique, the pyramiding can look like this. It can look like this, like 2% first, then 1%, then 0.9, 0.6, 0.3, or it can be even heavier, like 2.3, 1.2, 0.6, 0.5, 0.4, right? So there could be different ways to do it, or slightly like 1.3, 1.2, 1.9, 0.6. So what will happen is essentially these green bands will give us the total profit for different kind of moves. So if we try to look at different position, different strategies, so this is 14,000, 16,000, 19,000 is the highest till now, 18,000 is nearby, 17, 16, 16, 15, 12. So if we were taking equal tranches, we were making 12,000 rupees profit. But if we chose this tranching technique, pyramiding, our profit would have been 19,000.
Tranching was around 2.5, then 1.5, and then धीरे धीरे कम कर
So the most optimized for this set of experiment is 2.2, 1.6, 0.7, 0.4, and 0.1. So if we are able to follow this pyramid, so what I would suggest is that since you said that many times you enter all in, so instead of entering all in, maybe you can follow this tranching. So that way at least your risk will be cut by half, but your profits will be maximized because it will be 2.2, 1.6, 0.7. Last maybe we are just adding 0.1%, 0.4, 0.7%. So that way your risk will be really mitigated, but this particular pyramiding technique will help you maximize the return. So that could be another key takeaway for you.
I've seen that पांचों tranche बहुत कम होता है. 5 tranches.
Yes.
How do you kind of optimize that? So do you do 5 tranches or you do 3 or 4 or how does
I
that?
do 5 tranches, but the same math can be done for 3 tranches also. It could be done for 10 tranches also, and so on. So let me do one thing. I'll share a link of this with you, and maybe you can just try to tweak the cells, and accordingly you can maybe set these values differently.
Residual risk, that column that is there and the amount. How does that kind of play in your calculation of your next tranche? Does that have any bearing? If you can just explain that.
Just give me a moment. Let me open up the journal once. Maybe I will have some sort of old journal.
Are you using the Right Winners journal or you're doing the old journal?
No, I like the old journal because Right Winners journal has some some values are missing there.
Yes.
This I've tried everything, but this I found to be the most extensive one. Let us just quickly see a journal.
So the residual risk part is what I want to understand.
So suppose we took 5 tranches here. This would be like 2, 3, 4, 5.
Yeah.
Entry price would be say or better let us use these values, no? The optimized one.
Just put the most optimized one.
Most optimized one. Let's put
The 19,000 one.
so buy price would be this.
This one is a good find. Now the way you've given us the optimized values, I'll definitely try a trade with this
Sure.
amount.
In fact, this is the first time I did these calculations. So I have to start using this this
Really?
strategy.
How you felt? Yeah, that was really interesting.
Okay, so these were our deployed amounts, and this was how the allocation looked like. So when we set our stop losses, so suppose this was 100, no? So initially our stop loss should have been 90 here. Then say it was this, for example. So when we're setting a current stop, so this basically gives our initial risk was 2200, right? So here my initial stop loss was 90. Then I have to set my second stop loss in such a way that this overall risk remains still 2200. So what I'll do is if I set this as 100 and this at 100, so my residual risk is now 1450. But if I set it as 95 and 95, so my residual risk has increased. So and if I set it as 97 and 97, so my residual risk will be almost similar, and 98 probably I'll get the right price. So maybe my new stop loss price should be 98.
But then it's still not 2,200. It's 1,740, right?
Plus
Should it
440. So I'm risking 440 in the first tranche and 1740 in the second. So a sum of this would be, let us do it like this.
I'm not understanding this part actually, Nimish. You said rupee wise it should be exactly equal, right?
Yes.
The
Suppose we took the first tranche and we risked 2200 rupees. So my my new stop loss price should be such that the sum of all these residual risks should be similar.
How is it similar?
It is 2180 as of now, which is almost 2200 at 98 rupees of stop loss price.
Right. And the next one is 1,740. It's not 2,200.
No. Currently we are at second tranche. Now we took our third tranche at 110. So our stop loss should be that the sum of these three should be 2200. So I should trail my stop loss up. So this is what 2600. I should trail my stop loss further up. Now it is what 2200. So now, so the idea is as we keep on taking the tranches, we have to move the stop loss price up. Only then the residual risk will be safe. Now we move on to the fourth tranche. So at 120, if I had to become break even, so my new stop loss price should be.
Break even figure. What are you trying to emulate here? Your break even.
When I'm at fourth tranche, I at least want to break even, right? So, so the sum of these four should be positive or at least zero. So I can maybe take it as 105. So sum will be 100 rupees or maybe 103. So we can tweak the stop loss prices in such a manner that it is almost.
I think Nimish, if I recall correctly, Vivek, you used to say first tranche, absolutely correct what you're saying, that you take a fixed amount, 10%, 8%, up to 10%.
Yes.
Second tranche, I think the residual risk is the same, which is what you've also done. Perfect.
Yes.
Third onwards, you are zero or positive, right?
Yes.
The main is break even or positive, and you should be starting to make money basically.
Yes.
From third tranche, please start making money and please start looking at Shaktiman, right? That is the context.
Yes. So accordingly, we can set the stop loss price, and instead of just doing this math, what we can do is we can also see the charts, see where the AMs are, and what would have been a chart-wise stop loss, and how much sense is it making in the journey. Accordingly, we need to take up.
Actually, that is sometimes the thing, because we instinctively look at chart. The chart will show you that it's a stop loss based on moving average. That's what we typically use. The current stop loss as per the as per the journal will show something else. So then how do you marry the both?
That's my question.
We marry them both just by changing our position size.
So can you show it on the journal? What do you mean by that?
Yes. So suppose if I want my stop loss to be 110.
Okay, that is based on the chart.
Based on the chart.
Okay. Right, correct.
I think that, or say I wanted it to be at, how do I explain this? 105. Yeah, that should do it. Suppose I wanted my stop loss to be set at 105 and I wanted to, or maybe even lower, I wanted my stop loss to be set at 103, but I wanted to be profitable. So what is happening is this is profitable, but these three are not.
Yes.
So I could have simply tweaked the number of stocks that I bought here. I could have reduced this further. So this residual risk would have decreased.
And that changes the percentage of our tranche that we had decided, right?
Yes, that will change the percent of the tranche, but this we are taking we are not taking an actual case. If we take this percentage allocation with a valid breakout, no, so it will turn out to be profitable. Matlab, we would not face this stop loss setting issue.
Okay.
Because we are keeping our average price low, no, with this sort
Yes.
of pyramiding. So that's why.
I find it like Revathi most easy to look at the EMAs on the chart and set a stop loss. So basically, your stop loss, your average price has to be below the stop loss, right?
Yes. Average price has to be below the stop losses.
So basically, if you look at your chart and you keep setting your average prices and you see the EMA above that becomes your stop loss. And then you just put in your journal. Where's the confusion is the math that comes in the journal is very different from what we do in practical life, which is why, I have that gap.
And maybe we should have another column saying average buying price, I think.
Yes,
that would have been
that as a column at the journal we could suggest, or we could.
Yes, that would have been better. Yes.
Then we map it very nicely, because actually we should see number of shares basis the average price we get. So we can keep tweaking the number of shares basis the average price.
Okay.
It's
So
around
this is a valid feedback that it could have had this 1 hour price tells us something regarding that, but this is still too technical. It could have been more simplified with the average buy price, weighted average, and all those sort of things.
Can you explain this 1 hour price? How do you use this in your journal?
1 hour I do not use a lot. I simply follow. I just hunt for green candles. I try to pyramid wherever possible. Wherever not possible, I just follow 1%, 2% tranching, and accordingly I set my stop losses, seeing that what kind of residual risk is changing with kind of strategy. So this is not the pyramiding strategy that I always follow, but this is the most optimized one. And then there is also equal tranching, and there could be 100 ways of pyramiding. Each stock has to, we have to choose.
I would think the cheat areas you can do 1%.
Yes.
Cheat area. You do
actually the variables are the kind of stock, volatile stock, non-volatile stock, is one variable. Second variable, of course, is the market conditions.
Yes. So coming back to the force motors chart, suppose if we wanted to, take this pyramiding strategy of 2.2%, 1.7%. So that would have been 2.2 here, then 1.7 here, 2.2 here, 1.7 here, then say 0.5 here, 0.2 here, 0.1 here, something like that. So that will really bring down our average buy price, giving us good returns. But to get to this 2.2%, we could either directly buy out this breakout, or we can gradually build with 0.5, 0.5, 0.5, 0.5, and then 0.5. We can gradually build that 2.2, 2.5% position here. And then maybe we can take straight away 1.5, 1, 0.5, 0.1, something like that.
Actually,
so what you're saying is till breakout you get 2.2. Till
Yes.
breakout
Tell me one thing. practically, isn't it
Yes.
practical that usually when you start the position, you are very, you have the probabilities of will it work or not work? Okay, maybe you have 50 or 60-40. The better condition is you have 60-40 chances that it should work. Then you
Yes.
put a 0.5 or a 1, which is, a normal thing, unless you're, the market conditions are very positive, or you are very familiar with the stock. But in reality, at least my own personal emotional makeup is that usually when the stock has started performing and then you think your thesis is playing out, you tend to want to do your second tranche larger.
So
That is the
should not be
logical.
done. That should only be done when it has crossed the pivot point. If it has started to become extended, then we should not. We should
Not
do
in the
a
extended. I agree completely. Not in extended, but it so in your Donchian, see if it is in the cheat area, if it's the base breakout area, cheat area kind of investing you're doing, then we should ideally. So where is your chart and where is your tranche? So if your starting chart point can be 0.51 depending on the market conditions, depending on the volatility of the chart. If the chart is doing well, or if the thesis is playing out as per what you expected it to, and it is in the base breakout space, shouldn't you want to look at a higher allocation at that point in time, given that you yet have, the risk is lesser, and because you're yet in the so-called, you're from the low cheat, you become mid cheat, so your risk technically is lower, and hopefully you think the thesis is also playing out after a week or so, assuming that the probability, because your probability also changes, no, your conviction level also has changed. Psychological conviction is also partly because the stock has done well. I'm just talking like a complete, I have not talked anything about the technical part, but I'm just talking like from a mindset perspective. This is what we do.
So see, Revathi, both the things.
We may go wrong, but this is what we think.
See, both the things collide. So the price performs or the fundamentals perform. As they improve, we should increase the position to the pivot level. Then we should decrease the position.
So I would say that Nimish, shouldn't when you tweak around the tranching, shouldn't we look at that probability? Because usually our probability of that 2.2 will not happen in low cheat. You should be very, very convinced, or you should have been tracking the stock or the business, etc., etc. Usually the low cheat new level do a 2.2. At least not as per Vivek's time.
When we can do 2.2 and low cheat is alkylamine. This is a similar story, but it has a lot of bases. This is a base.
ग्लास कोड का भी वही सीन है शायद.
Yes.
वो भी अभी चल रहा है. वही.
मान लीजिए ये support है, ये एक support है, ये एक support है. This is a support or a resistance at this point. This is a resistance. This is a resistance. This is a resistance. So what are the chances of So what are the chances कि 100% movement एक बार में हो जाएगा? There are very low chances, right? It will break out, but then it will move in waves probably. Even if the story plays out fundamentally, it will still move in waves.
So this is, I think, only if you know a very strong triggers, because the chemical cycle, if you believe there's this chemical cycle is not linearly moving, right? So you're right. In this case, you would probably look at
what we can do. Suppose you wanted 2.2% in low cheat, so don't buy 2.2% here. You maybe buy say 0.5% here, then buy 1.7% straight after this breakout, and then you sit tight till the next resistance. It crosses the next resistance, you add 1.7, then you sit tight. Then it crosses the next resistance, you add 1%. Then you add 0.7, then you add 0.2, then you add 0.1. So as and when your theory gets validated that it is able to cross all these resistances, then you add. If you want to really make big money, maybe you can have 2.2% here itself instead of waiting for this full base to complete. Now what can happen here in this case is that it might complete the base, then it might break out. It might take 3 years, 5 years to play it as a 10x or that kind of story. It might happen, might not happen. So if you want to get really concentrated in the low cheat, so you can do 0.25, 0.75 in the low cheat itself. That here itself you can take 0.5%, then 1.5%, then maybe 0.2%. You slowly complete this 2.2% here, then you take 1.7, then you take 1.7, 0.2, and something like that. And you can keep adding as and when it plays.
Sure.
So what I typically do, Nimish, is if I have to do a 2.2 and like if I'm breaking it, I just combine the tranches and make it. I keep my base big. So even if I've taken 0.25, 0.75 and then 1%, I would combine the 3 tranches to make it a big base tranche, and in my journal I would write it as 1 tranche. The 3 tranches would
yeah, that is okay, totally okay. So there are 100 ways to have the same thing.
It's a very interesting conversation, but
Yes.
you are superb, Nimish.
Thank you so much, Nimish.
Thank you so much for this.
I'm sorry, we really chewed your brains. I know I've really chewed your brains today, but I just
No, the more we share, the more we share, the more we learn. Because thank you for having this session, because of which I could make this sheet. So probably I'll start taking these tranches correctly.
You can make out Nimish version 2.0. He will, I'm sure Nimish is good. We have a preview session. The next in a master circle, Nimish will be taking one on tranching, newer ways of tranching.
Nimish
Maybe
trust
we can have, yeah, let's see.
for everybody in quantum. People
Definitely.
own away.
We can upload this recording somewhere and we can share the link so that everybody can benefit. Yeah,
We'll
we
send
can.
you the recording. But I'm saying take a live session with quantum guys. They will be blown.
You did a very good
Let
job
us
on
do this
the
actually.
chart. The chart was really very effective. What you were doing,
Very nice.
that
Yeah.
was very nice. In fact, that I was hoping, to be very honest, Nimish, when you do the session for the larger group, if you could take that example of force motors with the live numbers and show that as the tranching with the average pricing as a column, I think we would get the next level of understanding, or whatever understanding we were trying to get, but having conversation more than, we would be able to substantiate with numbers.
Yeah,
Definitely.
and if you can use this new optimum tranching methodology with a live example and see how it's working out.
Sure.
So 1% is ruled out. I never like that kind of tranching. This I'm going to try for sure. And I like your the one on the chart, the average price and the
average stop loss and the tranches being highlighted, so that that depiction was good. And not only it was good, when you translate it in this kind of a table, it will actually showcase, if I did it this way, these were the results. If I did it this way, these were the results.
Yes.
That live example, if you could translate it in the Excel, that would be superb.
It's a very good session for quantum people. Superb, Nimish.
Definitely, let us plan one session soon. Maybe I'll once.
Vivek, whenever he's traveling next, he'll put you on the quantum.
we can definitely think about it, and I'll try to create an example maybe of force motors itself in a journal with different kind of pyramiding techniques and
perfect. It will make a lot of sense. And because we're also, actually what we're saying is markets are uncertain, in an uncertain market, but a company which is relative, and this company doesn't give much disclosures, right? Force Motors doesn't have a con call, nothing, but it had some base story of, so this is the case study has these parameters, and therefore the tranching case study has these parameters, market condition being volatile, but these parameters on the stock, this is the tranching. So then you have actually 2 beautiful case studies. That can be a great presentation content.
For next level in quantum.
Yeah, it will really be a lot of value. Because case study wise, it will really add a lot of value.
Definitely, I'll work on that, and once I'm done, so would be more than delighted to share it with the wider group.
Sure.
Okay. Thank you so much for this conversation.
Thank you so much.
Bye-bye.